Well, hello. My name is Reuben, and usually I do a cooking video for cooking in kitchens. However, because I am a real estate professional, I thought it would be a good idea to do something real estate related at least once a month. Um, and so I thought what I would do is go over this data charting, this data graphing software that John L. Scott uses called Trend Graphics. And basically, what it does is it takes all the data from the market and it compiles it into these relatively easy to digest graphs for the purpose of tracking trends and understanding, where the market's kind of moving. And so I thought it would be a good idea to just kind of go over this and maybe once a month do an update on these. Now, right now, as you can see, we've only got data for September. October's information does not get updated until the middle of the following month. So I think it's like November 14th, November 15th is when you will get the data compiled for October. So right now, I figured that this would be a good opportunity to just kind of go over these charts and explain what we're looking at and how this data is tabulated. So right now, it kind of defaults to King County. So we're just going to switch it to Kitsap County. Wait for it to update. And so for selecting the location, I'm going to uncheck that, and we're going to select excluding Bainbridge Island because the island will kind of push the numbers up a little bit higher. Um, and so we're kind of looking a little bit more accurate average data across Kitsap. So we're going to show chart. Alrighty. Um, and so what we're looking at is July 2022 to September 2023. Um, and let's go over what these bars mean. So for sale, this is an important one to note that we've got this nifty quick guide here. For sale numbers are a snapshot of the numbers of property for sales at the end of the month. And what's important to note is that any new listings that come on, if they sell before the end of the month and get taken off the market, they do not get recorded on this graph. So this is for any new listings that are new to the market and are still on the market past the month changeover. To get a better idea as to how many new listings come on the market, we've got this graph right here, and we can actually click show numbers. And as you can see, this gives you a better representation, a better idea. So at the end of the end of July here, there's 625 houses that new houses that were still on the market, or that were on, not new, but that were for sale at the end of the month. Of those 625, 471 had actually come on the market that month, and then we had 325 houses that actually sold. So we're still getting, there's still a surplus coming over. Now, what's interesting about this to note is if we go back, let's see here, change our date range. We'll go back the last 5 years and show chart. All right, so here we were just covering this section, but if you go back farther, when we were going through the pandemic world, you can see that there was a major shift in the light green and the dark green bar, as in a major shift in what was up for sale at the end of the month versus what had sold. Um, and so, because pretty much what was going on is, as anybody knew, anybody who was in the market at that time could see that houses were selling like within a week. So if a house went up at the beginning of the month, you could probably get it off the market and closed before the end of the month. A lot of cash flowing around. We had a lot of people coming in from Seattle area, and also California. We had a lot of folks coming up from California. Uh, but so that's what we were seeing, and you could there was a lot of houses that were being sold here in Kitsap. Now, if you go over to like King County's numbers were significantly higher than this. They're like, in the uppers of 2000s. But we don't live in King County. We live in Kitsap. So we're just going to kind of stick with this one. But you can see that there was certainly some spikes going on throughout the real estate roller coaster of sold, new listings, and stuff that was still for sale. So we're going to go ahead and switch back to our preliminary and show chart. Alrighty. So we'll move on to the next section. Let's see, we're going to go average price per square foot. Now, this will give you a ballpark figure if you are shopping or selling a house that does not have land attached to it. There's large portions of Kitsap County are marked as 1-5R, which means that it's allowed one residential for every 5 acres, because there's a fair amount of lands here that have acreage to them. Or a fair amount of properties here that have acreage to them. So these kind of numbers are much more accurate if you are around, if you're shopping around like Silverdale or Bremerton or Port Orchard. Then these would be a little bit closer representation, because if as everybody knows, if you have land attached to the property, like you start getting into past an acre, that'll start bumping these numbers up. So it fairly even, coming through here. We've got this is October. Oh, this must be a preliminary, because this information is not quite available, but there's something available, something up posted in here. Let's see what. Oh yeah, October 10/22 to October 10/23, or August to October preliminary. And what that means is that this is compiled of the data that they currently have. However, some real estate transactions can take a while before they actually get reported in. So when I do this next, when I do another update towards the end of the month, this number will probably change. It'll get corrected to whatever the more accurate number is. So what we will do, if you want to take a look at the longer trends that we have here, let's go ahead. And we can take this actually all the way back. We'll go back like 15 years. And show chart. Okay. So this is graph that we're looking at is really more for anybody who purchased a home around this area. This is back in 08, just pre-crash, or right when it was coming in. You could see the price per square foot as time moved on was going down, and it kind of levels out a little bit, but then it starts picking up. And then when we get to the lockdown times, you see it like really really taking off here as a price per square foot. So it's just an interesting piece of information. Like I said, this is really more for people who had purchased homes, back here like 10, 15 years ago, to get an idea as to what the value of their home has done over the last 10 years. Um, so we will change this back to, let's see, we'll just jump over to the next one. All right, so cumulative days on market. And so as you can see here, over the last 15 years, the cumulative days on market has been slowly at a steady decline. However, over this last, I don't know, year or so, whatever that is, you can see that that we went from, and this is about when we had our rate increase right here. So as soon as the rates bumped up, you can see that the time on market has gone up significantly. And then what this means, average cumulative days on market. And we just go over here to the read up. Cumulative days on market stands for continuous days on the market and tracks consecutive listing period. And then we've got, more importantly, cumulative days on market kicks in and tracks aggregated listing time of the property. If the property is off the market for 30 days, it resets the cumulative days on market. Usually only measured for a maximum of 2 years. And so, in other words, if something happens, like, it's discovered that the house needs repairs, or holidays come up, and the seller wants to take the house off the market, it will keep tracking. It's not going to take that section out or basically restart the timer until you pass 30 days. So it will obviously take off, like, not count the days where it's marked as being on market, but if you bring it back on the market within the 30-day limit, it will add the time together from before you took it off the market and then the time after you put it on the market. And then what we have here, selling price versus the original listing price. And as you can see, it was kind of steady. There is a bit going up. There's been a steady incline over the course of these 15 years. And then we had COVID, and we had the lockdowns, and we started getting this fluctuation, and then we had the rate increases, and that has been going down. You'll always see these kind of like waves because a lot of people move in the summertime, and that's when the more people you have moving, the better chances you have of, like, the more buyers you have, the more competition is, and so the greater the chance your house will sell over the asking price. However, when you have a major rate increase, that obviously takes a major shock to the market. And we can actually go, let's see here, go back up here, show chart. Take a little bit closer look at this. We're sitting all right currently over the last year. There's a little bit of dip as you come into the winter months, as stuff would sell, on average 5% less than what was asking. And coming into the summer months, it was a little bit more accurate, a little bit more on point. But we haven't really had anything going over listing, as opposed to, let's go back 5 years. Let's see if it'll give us the numbers on this one. Yeah, it's not showing the numbers, probably because it would be too crowded. Let's see if we can. That's calendar quarterly. Let's see if this will kind of like compress it down better. No, it didn't really give us much. So, but we can see. So here's your 100% line right here. So the summer time of 21, when things were going pretty crazy. We were sitting at 107%, 106, 107% on average, um, which that has a cumulative effect month to month, because when us agents, when we do our analysis on what a house should go up for, we check all the current um, all the current houses and what they've been selling for, and try and put the listing price at whatever the average of whatever houses will sell. So if a house goes 5% over, and then when your house sells, it's actually going to bump that up. If that goes another 5% over, then you're looking at roughly 10% bump from if you had sold the house, like say 2 months ago or something like that. So, but same kind of goes with the decline as everything's been going down. Okay, moving right along. Average price. This one I don't really I don't really put too much stock into the average price for sale and sold, because here in Kitsap, because we have a lot of island or like waterfront, the waterfront is going to skew the areas that are non-waterfront. Like in areas like where I live in Paulsbo, um, as opposed to where the prices are generally higher, as opposed to areas like Bremerton around the naval base, where your prices are much more reasonable, to be honest. But it is a denser population around there, so you're going to have lower housing prices in that area. So for some places, this is probably what will give you good indication. But as you can see, they're constantly they're not even closely related to each other. So I just kind of can't really use that information. But this piece is really really interesting here. So what we have is, this is months of inventory based on closed sales. And what that means is that if there was no new houses that came on the market, and at the current sale rate, how long it would take to consume all the houses in the market. It's considered 3 months is considered like a healthy market, when you have this kind of stuff going on, where we're getting down to like less than under 30 days or 2 weeks. That's considered a frenzy market by by a lot. It's a very, very, very hot market when you have houses getting picked up that fast. But as you can see, when we started getting our rate increases, that number has gone up quite significantly. And if we were to go to, and this is over the last 5 years, if we were to see this over the 15-year span, it gives you a much better long-term trend. So, 08, when we had the 08 housing crisis, you can see how things, how there was a lot of inventory because people were, walking away from their stuff, or getting foreclosed on and all that jazz. I'm not terribly familiar as to why we had a serious drop down here, but it didn't last, as you can see. However, it took better part of 10 years to really get through all that. We didn't even hit the 3 month mark until looks like 2015. But as things went on, and then we had our little lockdown area, and everybody was And with the work from home, nobody's gonna why live in a city that's overpriced on your real estate when you can get more bang for your buck over in like the suburban areas and over on the peninsula here where we're at. So and then once again we have this is what happened when they went to the had the rate increases. Uh, Stuff sat more houses sat on the market, which isn't a bad thing, because the it's much healthier for buyers because they're going to have more of a more options out there, and they do not have to they don't have to have like some serious competition on that. All right, so that will conclude our trends graphics here. And once again, my name is Reuben. I also do if you would like a comparative analysis on your house, and I'm more than happy to do that, provide that information for you. It's free. Just shoot me an email, and I will be more than happy to send to do an evaluation on your property and see how it's been stacking up since you purchased it. Because this right here is just it's kind of a very broad brush. But what I would end up doing is taking a look at your house and then researching all the houses that would compare with your property, and give you an estimate on what it would sell for. What you could likely get for it if you put it up on the market today. I also, again, I have a new magazine, or well, a new issue is just out for Good to Be Home. It's a free magazine, comes out every 4 months, and it has a lot of really great articles about homeownership, as well as recipes, as anybody who has been following my cooking in kitchens. So that is all for today. Thank you very much, and I will look forward to putting out another video soon. Ta-ta.